Hello, welcome. It's again Nika Roback from Replenish Financial Solutions, and I'm very, very excited about the guest that I have today, Matthew Owens from OCG Properties. He is just a wealth of knowledge, and I think that you will see that. And we look forward to having him on today. Thank you for coming.
No problem. Awesome. Excited to share some knowledge and see how we can help the audience.
Definitely. So I guess, it's always good to know who we're talking to first, right? So give us a little bit about, who are you and how did you begin in the wonderful world of real estate investing?
Okay, cool. Well, I started. My name is Matthew Owens. I'm a CPA. I grew up in Southern California and went to UC Santa Barbara and got a degree in economics and an emphasis in accounting, and really knew nothing about economics until 2008 when the market crashed. But I ended up quitting my CPA firm job in '06 to go into real estate right before the crash. So I was a
Ooh,
real estate genius for about a year and a half before I got my butt handed to me and destroyed by the market crash, of course, and my ego destroyed as well. And, just learned a lot of tough lessons, of course, at the time when you're going through that. Since then, it's a matter of standing back up and pushing yourself and continuing to have that grit, that you have to have in business. And,
indeed.
everybody knows that pain for sure. But, just continue to push. And we now have flipped a little bit over 1,000 houses. We have over 35 million lent out to flippers in different markets, and we've raised over a couple $100 million now for different real estate transactions or private equity as well as debt type transactions over the last like close to 20 years now. So it's crazy. I can't believe it's been that long. I've been telling my wife that I'm going to retire in 2 years since I started. So she's not happy because of this, but it's okay.
Right, right. I know that's what draws a lot of people into real estate investing. They see that the ads, no money down, financial freedom. So, yeah, but one thing
For sure.
that I do know about you, and I think is very important, and you can speak to this a little bit, is you share my values in that in educating people. I really appreciate that you have a lot of education. Can you talk a little bit more about how you do that for fellow investors and people new to the industry?
Yeah, absolutely. A lot of it comes down to not, I'll say breaking through misconceptions that people have, right? A lot of people think that, hey, everybody's been taught get a 9 to 5 job and put in the work long term, invest in a 401k and a mutual fund and things like that. And then there's a lot of people that are awake and realize that, hey, you can invest in alternative assets like real estate or debt or other type of equity investments and be able to grow your wealth at a far greater pace than I'll say mutual funds, for example, and be
Yeah.
able to take advantage of inflation hedges via using debt and those types of structures. Yes, there's some risks though, right? There's some big misunderstandings about how to protect yourself in the first place, right? And a lot of people think,
Right.
oh, I'm going to be a real estate investor. I need to go flip a house or buy a rental myself. And while that's great education, you're working. That's a job. That's not an investment, right? That's hard. And trust
Yeah,
me, after flipping 1,000 houses, it is a
exactly.
job. It is not investing,
It
right?
it
And
is a
so
job, that's for
for
sure. That one
sure.
I always tell people I kind of feel like flipping is the riskiest thing in real estate that you can do.
It really can be, especially in the beginning. If you don't know your numbers, you don't have your team, you have a construction aspect and risk there, right? You have the market risk, you have short-term timelines that you have to abide by for interest. And, a lot of
And some
people lose
money.
a lot of money, right? And you could be wrong on your numbers. And in the beginning, you're most certainly wrong, So,
Yeah,
um,
right. Exactly.
so the active involvement of this is appealing because you think I'm going to make a bunch of money flipping or I'm going to buy a rental and make cash flow, which you can do, but really the goal is passive investing. And if you already have a job, then why not just take that revenue and put it towards cash flow immediately? Because the point of flipping and the point of doing all this is to get cash flow. So you're just working a job to get enough money to put aside into cash flow investments, right? Long term.
Right.
So from that perspective, it's so much more effective, and the time on, the money you make, if you consider the time involved and the ups and downs of the learning curve, it's much better, honestly, if you have the capital to go in to that long-term investment from the start and invest in a diversified portfolio of syndications, or buy some rentals individually that you can own and have an outside manager manage those, but also invest in different syndications where you can do your homework first before you invest, and you diversify, so you're not, all your eggs are not in one basket, in one operation or one operator or one asset class or one market of the country, right? So all those things, I think, should be considered. But at the same time, it's really amazing that you people have this opportunity, and it really just takes the education on the steps to get there and understand how to protect yourself before people can truly be free by investing in these types of strategies. Yes, there's ups and downs and bad operators and things like that, just like everything, but you're definitely a bad operator if you go in the first time trying to flip a house for the very first time. You're not a good operator. You're investing with yourself, yes, but at the same time,
Right.
everybody's a bad operator in the very first deal, so
Right.
keep that in mind on the learning curve side. But
Yeah.
I just enjoy teaching people because I think through that education, people can literally choose their freedom and build a portfolio that's structured correctly and gives them the tax benefits and the inflation hedges and the things like that that are going to protect their wealth, along with the cash flow that can come with it from certain investment types. So it's really cool to
Indeed,
see.
yes. I think that providing the education kind of can give them the confidence in that as well, because they don't know what they're looking at or who to trust, you know.
Right.
So, but let's go back a little bit. You mentioned the word diversification. I am actually a huge proponent of that. Even, whenever I talk to people, I'm like, definitely, even if you're invested in real estate, diversify across asset classes and,
Yeah,
and various things. I think you, with that being said, the diversification you took to a whole nother level with the things that
absolutely.
you have for your investors. Can you kind of give some examples? And you mentioned a little bit, but what's currently that if someone came to you and said, okay, great, I have, this amount of money, what are the various different things that I can spread it out across if they're working with you?
Absolutely. And I think the first thing to do is take a step back and say, hey, it's not about the individual investment. First, it's about what's your goal and your plan. How much money do you need to cover every single month with cash flow from these investments in order to be free and develop that starting point so you know where you are now and you're
Right,
putting together your net worth statement, you see what your assets are and what your cash flow is and what the goal is. Then
right.
you can choose your investment at that point, right? And a lot of people
Good
know this, but maybe they did napkin math, and really dialing that in every
point.
month and being financially prudent is the number one thing you can do to build your wealth, aside from all these investments. So that being said, then it comes down to what, looking at those goals, which strategies would provide them the most benefit, right? And what I do is, I invest in all different types of deal flow, and because they provide different benefits
Right,
involved, right? And they give me that diversification in and out of real estate, correlated to the economy and not a correlated to the economy type deals, right? And
right,
so for example, I do a lot of single family homes. I have a bread and butter company that buys and renovates and tenants single family homes, as well as short-term rentals. I have those as an active operation that I do. I have a good team that's helping me with the management of those things as well. So I don't have to do all the day-to-day work. I still get involved and solve problems sometimes, of course, because that's what business owners do, right?
right,
But at the end of the day, I have this core business that we're doing that with, right? We also invest in and we hold a lot of rentals long term. The amount of wealth that I've built long term over holding rentals and having fixed rate debt that gets decimated with inflation, being able to front load the tax benefits when you buy real estate into year one and get big year one tax deductions to offset your taxes, which is your biggest expense, right? And
right,
then at the same time, being able to go and rate and value add and do improvements to those assets to then build forced appreciation equity
right,
as well and take advantage of that is a massive benefit, right? It's huge from a wealth building perspective. I by far my wealth has been built way more from the holds that I've had over the
right.
long run than anything else. It's insane how much that has done for us, right? Without the work, right, of doing it. Yes, management of managers on a monthly basis and things like that. It's not crazy significant unless you have a massive portfolio, but that's why you set up asset management in place. They can do those things for you. So you have a buffer between you and the manager and the property, right? So you don't have to be dealing with the day to day. Now, that's one aspect, right, for those benefits. And you can get those types of benefits in large syndication deals. You don't have to own them yourself. You can get them in mobile home parks, multifamily deals, self-storage deals, right? All different and short-term rentals, all these different types of real estate that can be put into a fund where you don't have to qualify for the financing. You don't have to go through yourself and put up all the money for the deal. You don't have to do the workload involved. You're not taking any excess liability on your shoulders because you're a limited partner in the deal and only the general partner that's running the deal has the liability. And so there's all these amazing benefits where you can buy a Class A multifamily building that's a $40 million building and put
Right.
$50,000 in and own a piece of it, right?
Right.
And from an operator that has 25,000 units or something like that, that's been doing this for 10 years, right? So
That's the
that's the
key.
benefit
Yeah.
of yeah, it's so cool where you can,
That's your
you
job is
know,
picking the right person, right?
right. And so the homework on that operator when you invest in that strategy becomes really important. And we'll touch on that in just a second. But so we have the assets over here, the real estate side that gives you all of these types of benefits, right? The diversification and the different ways to invest in a direct asset or a syndication. And then on the other side, we invest in promissory notes because they give us consistent cash flow
Yeah.
streams, right? And that's lending to flippers, right? That's also doing accounts receivable financing. That's also
Okay.
potentially lending to attorneys and things like that for lending financing, right? There's different ways to lend money, and it's all about what's my collateral involved versus my investment
Exactly.
amount and who's my borrower and their financial strength, right? And the viability of the investment in itself, right? So those are the primary metrics to protect yourself when you're doing lending, but it can give you a very consistent cash flow stream. Really cool, right? You have
Yeah.
equity
Be the
growth
bank.
over here with some cash flow, and usually the real estate side takes a little time to bump that cash flow up because you're doing value adds.
Right.
And then on the other side, on the promissory notes, you have consistency of these cash flow streams over and over again based on a set monthly or quarterly payment that comes in. So that gives you that benefit of being able to immediately cover expenses too and start compounding that savings across the board with your savings of your expenses. And then I also invest in alternative assets like marijuana farms and different projects like that that are actually unique that don't necessarily have a direct correlation with the economy as a whole. And then I have an insurance policy with gold and silver and commodities and things like that because really at the end of the day I'm a prepper and I have, my water barrels and my food supply and all this stuff. And you got to have your gold and silver, right? And be able to, I'll say if the dollar collapses and the BRICS takes over, then of course, what are we going to do, right? We got to have something to fall back on or to start over
Right.
with, right? So, but that's why you hold hard assets as well as paper so that you diversify to be able to create that hedge against the dollar that's going to continue to print money, right? So you got to build your wealth that way. So hope that helps. I
Exactly.
know it was very long-winded. I apologize, but it was,
No, 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 no. That's
important to
it's a
understand.
very valuable information, and right in line with what I believe as well. It's funny that I didn't know that part about that you had some gold or had that aspect either. 'Cause, yeah, I have a guy that I have that I can get gold and silver, and I always tell people, have a little bit in the hedge in that as well. So always good to
Absolutely.
diversify. I mean, the one thing I'm not as knowledgeable or, that's that I think is also not for the faint of heart is a little bit of crypto, but
Yeah,
yeah, no,
absolutely.
that one's
That's different startups and things like that, betting on the right operator on startups, but not going crazy with the amount of money you put in, keeping it
right.
limited where a small bet can pay off big time on the right team and the right operator that has that experience. But that's really what those types of startup investments are, is a bet. You don't have the
Yeah,
control like you do in some of these real estate strategies where you are going to do your value add, your numbers and your conservative estimates up front, which is why, like what you were talking about analyzing and doing the homework on the operators involved in that deal
yes,
before you invest is crucial. And I think that's the
very.
key. A lot of people don't know how to do that. And even sometimes, even if they do all the homework, there could be something that changes in the economy or something changes with a team member or something that occurs that could cause a deal to go sideways or cause a problem, right? So you really got to be very careful and make sure you take baby steps and that you are doing your homework up front. And the homework on the operator is by far the number one thing that you should be doing. Background checks and criminal checks, making sure that you understand their conservative estimates and why they chose their numbers and you agree with them. What's their track record? Can you call investors that have invested with them in the
Exactly.
past? Review their previous quarterly reports. All of that stuff will go a long way in being able to protect you, because I can tell you fraud is rampant and you want to be very, very careful out there when you're investing. And so, like, we have a 200-point due diligence checklist that we give to everybody. It's actually on our website, MatthewOwens.com. You guys can download it, but it's for free. And we use it on all of our projects. Now, we get modified, right? It's built for multifamily. And so you got to go take any new type of deal you're doing and make adjustments and say, what homework
Right.
can I do to protect myself? Where are the real risks and how have they been mitigated, right? A lot of people think,
Exactly.
hey, on a multifamily property, maybe it's in Florida or something. Oh, what about water damage and things like that, if it's close to the water or something, and being able to mitigate that and show them the types of insurance you put in place to cover that
Exactly.
stuff and how you mitigate that one in particular risk. And if the operator doesn't have an answer for you about all of those risks involved, then or doesn't say, oh my God, I missed that. I'm going to go look and research it, right? Because they're not going to be perfect either, right? But there could
Yeah,
be a risk that they don't think of, and you could, come up with something. And now with ChatGPT and AI, you could probably come up
that's
with a
true.
bunch of ways to do homework,
Right.
on a deal, right? So create your own
Exactly.
checklist really quick. So
Exactly. And I'm pretty sure that after everything that went on in the multifamily, that the new question is, how is your financing? How did you
right,
structure it?
right.
You
A
know?
lot more people are, that's the first thing they're thinking about is,
Yeah.
hey, do you have a fixed rate? Is it going to be a balloon after 5 years or 3 years on a bridge? And can you get an extension on it, right? How conservative are you on your loan to values, and what that refinance rate's going to be in 5 years when you refinance? Are you bumping it up a point or two, just pretending like the interest rate's going to go up, and does it still work? And then also, what
Exactly.
happens if rents drop or expenses skyrocket, right? Or something happens in the market there. Are you going to be able to still refinance, or are you break even on your money? Are you losing your money? Understanding that break even analysis, I think, is really, really key because risks occur
Exactly.
you can't mitigate, right? Like the market or the economy change, right? Yeah, you can see it coming to a degree, but you never know when because they could just print more money and make things look pretty with the data. So
Exactly. Exactly. Yes. Thank you. Thank you. It's very, very important. And I think even just to learn enough that you aren't necessarily would be the operator, but learn enough to ask the good questions. But you're right, Chat GPT actually you can
it's
you can get
amazing what you
some.
can do with AI
It
now. It's
is.
exciting.
It
So
is amazing. Yes. Yes. So one thing, I guess we kind of already talked about that, but maybe what is the best financial freedom advice that you ever received? Maybe, now you give the advice, but what is it
really,
thinking back that was really kind of that you can remember now that you even share with people that was the best advice you got?
it's hard to pinpoint the best advice. I think the most
There's so much.
the most life-changing advice was actually from my father. My father was a CPA, and he basically taught me the importance of tracking your money and tracking your he literally taught me the whole writing out the checkbook, register and all that stuff, and taught me to
Right.
how to be financially prudent on that side and track, because then you know what you're spending. Because what tends to happen is as your income goes up, so does your expenses, because you want to live a better lifestyle. Sometimes it's inflation, like food prices, of course, and you can't do anything
Right.
about that except for cook more at home and stop eating out. But
Exactly.
probably
Yeah.
healthier for you anyways. But
It is.
at the end of the day, it comes down to being financially prudent. The number one reason a lot of people, business owners, don't pay more in taxes is because of lack of tracking, lack lack of being able to really, get every expense line item and be able to do that tax planning to a higher level, right? Because I think people miss out on thousands and thousands of dollars a year just from a lack of knowledge on the tax side of things and the tracking side of things. And with having that vision in place, knowing here's my monthly expenses in my budget, but here's what I really want. Do I want a chef that's going to come in and cook me meals every month and do this?
Yes.
How much is that going to cost a month, right? How much does it cost to have go on vacations for half the year, right? That you want to do, right? And build what you want and target that and say, this is what I need to cover my expenses to be free. And then here's my vacation wheel and my goal wheel over here of what my real goal is to get to and the way I want to live my life. And if you want to travel all the time and do that, I have a friend that goes in, travels the country in his RV right now and just lives and does that, right? We've been traveling quite a bit, going to different masterminds all over the country and to Mexico and different places as well, consistently throughout the last like few years, and just changing the way we live our life in that way. We have private school and homeschool for our kids, so we can go and create the life you want. So the whole point is that
Nice.
vision first and the tracking to know this is what my initial goal is and this is what my dream goal is. Now, let me backtrack that and say,
Reverse engineer.
if I
Yeah.
want that in 5 years, what do I need to do in where do I need to build to in 3 years to get there, and then a year, and then 6 months, and then go down to literally break it down that way and say, here's the exact way I'm going to get there. If you do that, you're going to be tenfold above or 10x above everybody else and being able to get to that goal. It's just having to hone in on that exact vision to be able to do it. And the tracking piece is really kind of what allows you to do that and set up that vision long term for yourself and the life you want to live. Because if you think about the life of, being free, it's really empowering to push you to get your goals done because, that lack of motivation so many people have, um, once everybody's lazy sometimes, right? Of course, we all don't do what we think we should do sometimes. But at the same time, like the more you can fight through that, the more successful you're going to be. And the way you do that is by having that vision of your goal in your mind because it gives you the energy to say, I want freedom, and freedom isn't free. I'm going to go push for this, right? And
Right.
go to the gym when you don't want to, or go do the things you all hate doing. We all hate doing. So,
Oh yeah, definitely. It's funny. I actually have this app that was that said, one of the keys to success, it just reminded me of that when you said that, that is do what you hate first thing in the
yeah,
morning. And then everything else is like gravy after that, right? So
exactly.
do what you hate first. But yes, oh that is incredible. Definitely good advice and planning, and you come from, the CPA world, so I'm sure that is ingrained about the planning, but it's needed.
Right,
Any
right,
any kind of planning. I mean, even when people start a business, you have to have a plan. So,
right,
planning for your life is also needed, just like you would sit down to plan for a business or
right.
your investments. Yeah, planning for
Absolutely.
your lifestyle. Love that. Love that. Yeah.
That's awesome.
And one thing that I do like about you is that you have that thought of the taxes, and that's probably a whole nother time that we can kind of get ingrained about all of the ways to save and think about the taxes. I mean, I kind of feel that that's almost like another return sometimes, because the more that you can keep in your pocket and mitigate against the taxes, the better. But there's one thing that you said a while back, that when you were talking about how you even structured your deals, and you even structured knowing that, and I did
Right,
appreciate that you have that mindset and coming from knowing how to help people on their taxes, even at the beginning,
right.
thinking about the structuring the investments. But we don't have to get too much on that. Like I said, that's a whole nother ball game, and probably another hour. And I'm sure you do a lot of teachings on that as well. So, um,
Absolutely.
yeah, definitely. But I just wanted to point that out, that I do appreciate that
It's
about your mind, and that being you being the operator to think about those things as well with the taxes. So,
it's pretty
um,
amazing. I mean, some of the short-term rental deals we have, you're talking about $300,000 down payments and getting $250,000 year one tax deductions that equate to like $100,000 in tax savings that we can structure and put it against their W-2 income also, which is insane. And just like literally wipe out 100 grand worth of taxes. And some of the this is the things that get me excited because I
yeah,
hate
me
paying the
too.
government money because they just waste it, So
I love that. I know. I know. I mean, I learn new things about tax strategies every day. I have a couple one thing, oh, I should share with you a little later. But anyway, I think
absolutely.
you might find it interesting that a tax strategist friend, a very high level, I got aligned with him. I should introduce you two together. But anyway, sorry, I digress. But
No worries.
yeah, so it was amazing to have you on today. I don't know what else, as you can tell, why I really love Matt, and love to collaborate and work with him for all of this wealth of knowledge. I know that that was only scratching the surface today, but I will probably have him on and do a little bit of a tax thing, since we both get very excited about those as well. But would you like, is there anything last thoughts for our viewers today and fellow potential investors?
Yeah, I mean, really at the end of the day, just like I said, focus on that vision and that goal in mind because that's really the whole key to this. And, do your homework. Just it's worth learning how to do your homework and your due diligence on people and operators so you can start investing in this type of space because it is really the true key to being financially free. It's going this route and finding cash flow investments that are not normally available out there, that aren't taught to you in schools. They're not the traditional methods of invest in the stock market and mutual funds that you really don't have that much control over. So you can control your entire future through these types of strategies, which is really cool.
And most financial planners don't know about these things, right?
Yeah. They
They're only
understand,
really,
but they don't make money off of them. So a lot of times they can't recommend them. There are some good ones out there that do understand what they're doing, but the majority they work for a broker that they don't get that work, that so they don't make the money
yeah.
off of it. But anyway, so there it's amazing. If you guys want to know more, you guys can go to my website at matthewowens.com and we got some free master classes and things like that and that checklist I told you guys about. So you
Nice.
can have
Yes.
that for
And I'll
free.
post that underneath here as well, so you can have the links to go to. And so thank you all. I appreciate it. And you can always reach out if you, I am a wealth of resources. So please, I am open to have a conversation in any way, help you any way that I can. So thank you and have a good day.